Hello my dear students, I hope you have been doing well. Today we are discussing about preparation of financial statements. We prepare financial statements at the end of the accounting period to determine financial position of the business. Where does the business stands? What is the profitability position of the business? What are the position of the assets in organization owns, and what is the position of the liabilities in organization owes, and the position of the owner's equity. Basically, there are three financial statements that we prepare: income statement, statement of owner's equity, and balance sheet. First, we are supposed to prepare income statement, then statement of owner's equity, and then balance sheet. It's not like that first you are preparing balance sheet or statement of owner's equity or then income statement. No, there is a proper sequence. First, income statement, then statement of owner's equity, and then balance sheet. Because if you intend to prepare a statement of owner's equity, you need inputs data which is taken from income statement. Similarly, if you are preparing balance sheet, you need inputs data from statement of owner's equity. The first financial statement that we are going to prepare is income statement. Income statement basically shows the profitability position of the business, either business is earning profit or going in loss. We prepare income statement at the end of the accounting period. We compare revenues and expenses with each other. The excess of revenue or expenses is called net income, while the excess of expenses over revenues is called net loss. So this is how we drive net income from operations during current period through income statement. Then once we have prepared income statement, then it's time to prepare a statement of owner's equity. A statement of owner's equity basically shows the changes in the owner's equity or the investment or the capital of the owner. How we do that? First we write down the previous closing balance of the owner's capital, then we add the income for the current period in the previous balance of the capital or of the owner, then we subtotal, then we subtract drawings of the owner during the current period, then the resulting value is the position of the owner's equity or the closing balance of the capital at the end of the accounting period. Then after preparation of the statement of owner's equity, finally we prepare balance sheet. In balance sheet we compare assets with the liabilities and the owner's equity. Basically in balance sheet we show that total of assets is equal to the total of liabilities plus owner's equity. So basically balance sheet shows the position of the assets in organization or resources in organization owns, in the liabilities in organization owes, and the capital. So how we are going to do that? So from we basically write down all the closing balances of the assets taken from adjusted trial balance on debit side of balance sheet, and then from credit side we write down all the closing balances of the liabilities and the capital. Then we compare either total of the assets is equal to the total of liabilities plus owner's equity. So through that we came to know that what is the position of the assets and the liabilities and the capital at the end of the accounting period. This is the purpose of the preparation of balance sheet. Now we will prepare all these financial statements with an example of Robert's real estate company. If you can recall your memory, in last lecture we prepared adjusted trial balance. Now from that adjusted trial balance, it's time to prepare the financial statements. So let's start preparation of financial statements. Preparation of financial statements. These are the three financial statements we are going to prepare: income statement, statement of owner's equity, and balance sheet. First we are starting with income statement. This is the adjusted trial balance that we prepared in last class. Now that adjusted trial balance provides us basis for the preparation of financial statements. So from that adjusted trial balance, the first financial statement we are going to prepare is income statement. Now for the preparation of the income statement, we will take revenue items and expenses items from this adjusted trial balance. We will keep these assets item as well as liabilities and capital as it in that adjusted trial balance. We will not, we won't touch these items for the preparation of income statement. So here is the Roberts Real Estate Company income statement for the month ended November 30, 2019. Now we have taken these revenue items from the adjusted trial balance. Sales commission earned 15,484, management fees earned 420. Total revenues for the month of November are 15,904. Now we have here mentioned all the expenses items taken from adjusted trial balance. Advertising expenses 1,275, salaries expenses 9,605, telephone expense 1,195, insurance expense 50, office supplies expense 220, depreciation expense building 150, depreciation expense office equipment 45, interest expense 30. Now total of all these expenses is 12,570. As we already discussed, so in income statement, we compare revenues with expenses. If revenues are greater than expenses, it means there is income. But if expenses are greater than revenues, it means there is loss. Now you can see that total revenues are 15,904 and total expenses are 12,570. Now the revenues are greater than expenses, it means we have a net profit or income of 3,334 at the end of the month of November. So that's all about income statement. Here we have prepared report format of income statement. You can also prepare uh, account format of income statement. In account format, you divide income statement in two parts: debit side and credit side. On credit side, you write down all revenue items, and on debit side you write down all expenses item. Now you deduct credit side revenues from debit side expenses. Now the net income again will be same, 3,334. So that's all about income statement. Now after income statement, we are going to prepare statement of owners equity. Now this is the Roberts Real Estate Company statement of owners equity for the month ended November 30, 2019. Now here first we have given the James Roberts Capital October 31st, 2019. This is the balance of Roberts Real Estate Company James Roberts Capital at the end of the month of October. Now currently we are preparing statement of owner's equity for the month of November. Now this is the last month's balance of capital. Now in the current month, Robert Real Estate Company has earned income of 3,334 as we just determined in income statement. Now we will total all these two values: James Roberts capital at the end of the month of October previous month and income for the current month of November. Now subtotal will be 184,105. Now from that subtotal we will subtract the drawings by the owner Jeff Roberts by the end of the month of November. Now in adjusted trial balance you can see that on debit side, drawings of the James Roberts capital by the end of the November are 1,500. Now we will subtract these 1,500 from the subtotal of 184,105. Now the closing capital of James Roberts at the end of the month of November is 182,605. So now this is the James Roberts closing capital we will show in the our next financial statement in balance sheet. That's all about Roberts Real Estate Company statement of owners equity. Now finally we are preparing balance sheet. Here is Roberts Real Estate Company balance sheet November 30, 2019. Now on debit side we have mentioned all the assets of Roberts Real Estate Company, and on credit side liabilities and owners equity, because the total of assets is equal to the total of liabilities and owners equity. Now we have taken all assets from adjusted trial balance as it is cash 21,740, accounts receivable 16,990, management fees receivable 120, unexpired insurance 550, office supplies 500, land 130,000, building 36,000. Now in balance sheet we are supposed to show the book value of a tangible fixed asset. Book value of a tangible fixed asset is the original cost of an asset less accumulated depreciation, which we have showed in the on the credit side of the adjusted trial balance. Now after deducting accumulated depreciation from the original cost of the asset, the book value of of building is 35,700. This is the value at which assets are shown in balance sheet. Similarly, we have showed book value of office equipment as original cost of office equipment was 5,400 less accumulated depreciation on office equipment at the end of the month of November 90. Now the book value of office equipment by the end of the November is 5,310. The total value of assets at the end of the month of November is 210,910. That's all about assets closing balances. Now on credit side we have shown here liabilities and owner's equity. So in liabilities first, notes payable, these values are also taken from credit side of the adjusted trial balance. So notes payable liability there was 3,000, accounts payable 23,595, interest payable 30, salaries payable 180, unearned management fees 1,500. Now that's all about the liabilities. Then finally we have showed here James Roberts capital at the end of the month of November. This is the closing balance of the capital that we derived from statement of owner's equity. Now at the end of the month of November, James Roberts capital closing balance is 182,605. So now we have added all liabilities and owners equity together. Now the total liabilities and owners equity balance at the end of the month of November is 210,910, which is equal to the total assets of 210,910. Now you can see that assets are equal to the total of liabilities and owner's equity. This is balance sheet. This is showing us the position of the assets closing balances of assets at the end of the accounting period, as well as the position of the liabilities and the owner's equity at the end of the accounting period. So that's all about Roberts Real Estate Company balance sheet. Now it's assignment time. This is assignment for you. Now in problem, these are two problems which are given as assignment. Problem 4A5 page number 206 and problem 4A6 page number 207. These all both problems are given from the Meeks and Meeks book of accounting. So what you are supposed to do in these problems? So in these problems, first trial balance are given before adjustments, then adjusting entries are given, and then further what you are supposed to do in both problems. First you have to prepare adjusting entries journal, then you have to merge these adjusting entries journal with the already given trial balance in your problem 4A5 and 4 and 6. Then you have to prepare new trial balance after adjusting entry, which is adjusted trial balance in step 2. Then from that adjusted trial balance, finally you are supposed to prepare financial statement that just we have discussed in this lecture: statement, income statement, statement of owner's equity, and balance sheet. So please solve both these problems and submit to me by 20th July 2020. So after completing assignments, take pictures and send to me. So feel free to contact me if you have any issue from these problems or from today's lecture. That's all about preparation of financial statements. Thank you.